Yeah, let's do it. Kick it off.
You good to go?
Good to go.
Hello, everyone, and welcome to the show. My name is Chris Alaimo.
And I'm Ben Gassaway. Together, we are the Amateur Investors.
This podcast is our open source journal of everything we learn about investing and wealth management.
We're here to explore the key concepts, market dynamics, and investing strategies that will assist you on the path toward financial independence and financial literacy. Our mission is to build us up from amateurs to experts.
All suggestions are our own, and we recommend that you do your own research before taking any investment advice. See you in this week's episode. We hope you enjoy it. How's it going, everyone? Welcome to the Amateur Investors Podcast. As always, it seems in late weeks that we have a guest here. We have Will Clemente. Will's a sophomore at East Carolina University. He's a Bitcoin maximalist like Ben and myself, and he's made some real waves in the Bitcoin community with a bunch of his articles that are really short, concise, and well-written. Thanks for being on the show, Will.
Yeah, thanks
a lot for having me on. I'm super excited, guys.
Yeah, so as of with the Bitcoin community and Bitcoin in general, just seems that something's always going on. I mean, when we were trying to get this on, there was a couple conflicts with scheduling conflicts on our part and then your end. But so we were going back even like 3 or 4 weeks ago, which seems ancient in this day and age with the Bitcoin community. But we have
I'm glad it worked out.
Yeah, exactly. We have Tesla putting 1.5 billion worth of US dollar into Bitcoin on their balance sheet. We have Visa and MasterCard rushing to allow customers to use cryptocurrencies, mainly Bitcoin, to transact. We have very recently Square doubling down on their Bitcoin purchase initially. I think they had 50 million. They just put an additional 170 million into their investment. Michael Saylor constantly, he's like, you know, the bread and butter of the Bitcoin community and our savior. He bought an additional 328 Bitcoin literally this morning at a price of $15 million. Twitter borrowing MicroStrategy's strategy of offering convertible debt, 0% convertible debt on their balance sheet in the form of $1.25 billion. So we just got people buying Bitcoin left and right out the wazoo. It just kind of seems like all the dominoes are falling into place that Bitcoin really becomes the world reserve currency, at least in the next 10 years, it appears. Might be slower, might be faster. I'm not going to be one to predict that. But Will, what are your compliments? Where do you see Bitcoin going? I know you're a maxi just like Ben and myself, but we'd love to hear what you say.
Yeah, man, I think this is kind of just getting started. You know, like you said, the dominoes are just beginning to fall. Well, it'll be interesting to see how much of that, I think it was 1.25 billion that Twitter raised through the convertible notes. So it'll be interesting to see how much of that they allocate to Bitcoin. You know, I was on Clubhouse earlier and Preston made a really good point that if they had mentioned that they were going to buy Bitcoin, I mean, they could potentially put a negative yield on the notes. And I still think they would still get the same subscription that they got, or possibly be oversubscribed.
Yeah. Yeah, that's been the case with MicroStrategy. Every instance of him offering the convertible notes, it's been an oversubscription in like the hundreds of millions, right?
Yeah.
So he needs to jack up the strike price on those.
That's for sure.
Yeah, for our listeners, basically what that means is when they're offering debt, they're offering convertible bonds. Basically, that means they're offering debt. So basically, they're paying the company in term that those bonds will become common stock in like 5 to 6 years. Normally, is how it runs. Yeah, so it's just very interesting. With an option to convert it. That's correct. Sorry, my mistake. Yeah, with an option to convert it into common stock. And it just, with the Bitcoin craze, everyone just seems to be going nuts. For the people that don't want to hold it themselves, a lot of people find ways of either investing in, you know, GBTC, which is a grayscale trust, or MicroStrategy is now becoming, in a way, a Bitcoin ETF, we joke. And I know Twitter and Square with Jack Dorsey being one of the founders and on the board there, he's obviously really big into Bitcoin. It's the only word in his bio last time I checked still.
Yeah, I'm wondering what the tipping point will be for companies to sort of start to embrace Bitcoin as a true value proposition, because I keep seeing all these like buzz fluff articles from like CNBC where they're like, oh, this is a tipping point for Bitcoin. It's either the next global currency or it's an implosion. I'm like, what does that mean? We've seen Bitcoin price correct and reach new highs time and time again. The supply has remained fixed at an asymptotical 21 million. It just doesn't seem like people are getting the message that there is a supply asymptote on this digital asset that is literally derives its value from energy and securing through the proof of work. Will, what are your thoughts on what companies might come next to join the bandwagon of putting Bitcoin on the balance sheet? How many more trillions of dollars does the Fed need to print before they realize that their US dollars are literally monopoly money, if not less?
Yeah, man, I would suspect it'd probably be another tech company. I don't know, maybe Oracle or Google, or, we could speculate about the certain names. I just wanted to touch on one thing that you just mentioned about, the supply suffocation, if you will, that, there's a lot of aspects that are part of this cycle that haven't been in previous cycles, including, the maturing lending and borrowing markets, and then also the derivatives market as well. And for those that aren't familiar with the way this works, is that all the contracts are over collateralized. So anyone who is entering into some kind of futures contract is actually, or just, flat out borrowing Bitcoin, is actually locking in more Bitcoin into escrow through these lending platforms. It's actually accelerating the rate of supply that's already being taken off of the market, right? And then as well, when you look at Grayscale, for example, I mean, the way that the trust is set up, the coins that are put into the trust can't be touched for at least 6 months. So those coins are just gone off of the market as well. So I think if you look at like the balance of coins on exchanges, there's plenty of charts on Glassnode or some kind of data analytical company like that, and you can just see the slope of coins on exchanges is just dramatically going down, especially compared to any previous cycle. So it could be just, that more people are looking to adopt Bitcoin as this inflation hedge asset, and that could just be a reflection of the demand. But as well, I think these other factors are also playing a big part in that as well.
Yeah, there's a couple of points I want to touch upon there. If you don't mind, could we dive into the over collateralization of Bitcoin? Explain that a little bit, and then where you see we're at for the over collateralization cycle, and how that might evolve in the near to long term, if you don't mind.
Yeah, sure. So for lending platforms, I think the most popular one would probably be BlockFi. In order to borrow Bitcoin, a lot of these people will borrow them to kind of arbitrage the difference between the premium that futures are trading at and the spot price. So for example, if you pull up I haven't looked recently, but if you look at CME, for example, the premium that it's trading to the current spot price is like 5,000 or 6,000, for a contract, 2-3 months out. So by selling the futures contract and then simultaneously buying the spot price, you can kind of capture that essentially risk-free yield. And in order to sell the futures contract, you have to buy Bitcoin or borrow Bitcoin, right? And so when you go to BlockFi, for example, because Bitcoin is so volatile, you have to over collateralize to make it safer for the lender. So let's say I'm going to borrow, just for an example, $50. I have to over collateralize and put in $100 as collateral, and then BlockFi takes that $100 and then they turn it into Bitcoin to hold it in escrow, which just means that it's locked away until you pay the collateral back, or the contract expires. So what ends up happening is that you're actually, they're borrowing, for example, 1 Bitcoin, and they have to post 2 Bitcoins worth of collateral up. So what's happening is, instead of that 1 Bitcoin being taken out of supply, you're actually taking 2 Bitcoins out of supply. And this goes for the people that are also selling Bitcoin short. So if you think of it this way, it's kind of a paradox that these people that are selling Bitcoin short and borrowing Bitcoin, but you have to have physical Bitcoin to sell it short, they're actually squeezing themselves, if you think of it that way, right?
Yeah, and I think Bitcoin's going to be even more exaggerated. I think we saw with Tesla over the last 5 years, the hedge funds and just shorts in general were trying to kill his company, and I feel really bad. I mean, I guess it's hard to feel bad for the first richest or second richest guy in the world, but I know at him trying to build out the vision of his company, he was really getting slaughtered by, the financial sector and them trying to constantly short his company into oblivion and trying to really disrupt. Instead of him developing products, he was kind of having to, be more the CEO, kind of capital allocator, trying to, jack up the stock price, trying to fight against the financial sector. And then we saw another example of that with GameStop with, Melvin Capital, Citadel, Robinhood, all that. That was more of an abbreviated, really quick launch up, people over shorting GameStop. I think, if you try and short Bitcoin, just not only from the volatility alone, but just from the global adoption, not even from just us, but other countries and companies putting on their balance sheet, that's a good way to wipe out your company and go bankrupt. And it's something you'll never be able to pay back with the rate at which it could change and go.
Right. And yet, one thing as well, as more companies kind of, or I should say institutions or hedge funds, whatever it may be, that are looking to capture this risk for yield, the yield is going to go higher as the premium contracts keep getting bid up, right? Especially, as Bitcoin starts to get super bullish, I would suspect, people are going to anticipate that the price is going to run further. And, it's hard to predict exactly why the futures are trading at a premium to the spot price. Part of it could be, because if you think about it, right, like usually commodities, they have a futures premium because there's storage costs. There's no storage cost to Bitcoin. It's just, it's just completely digital. So I would suspect and I've talked to Preston about this, and he kind of suspects it's either one of two things. Either, futures are probably the easiest way to get a leverage position into Bitcoin versus spot. It's not as easy to get leverage positions. But also because there's probably a lot of funds out there that can't get access to spot Bitcoin, due to any kind of, certain like regulatory reasons or whatever. So they're able to get exposure to it through the futures contracts. But back to what I was saying, as you see these yields keep getting fatter and fatter, right? If more people start to view this yield as the risk for yield that they're kind of denominating asset valuations in, it's going to completely destroy all legacy markets. For example, when you're doing a discount cash flow model, you're using this discount rate, right? And right now we're using the U.S. Treasury yield. That most people use that as the discount rate. But if you're using this Bitcoin yield and it blows out to 20+%, I mean, you're looking at a dramatic, 60-70% stock market crash
on like the long-term growth rate versus the 10-year.
Yeah, exactly.
Absolutely.
Yeah.
Yep.
And right now, on average, PE ratios are, I think for the S&P, last time I looked was like right around 34 or 35 on average.
Yeah, last time
we're
I
about
checked,
like 34 on a Schiller PE.
Yeah, exactly.
Yeah, and if you have these 20+% risk for yields, I mean, you're looking at a crazy stock market correction that would bring PEs back down to below 5.
Yeah, because you're basically, for our audience, the price to earnings ratio, I know Ben and I have mentioned it before, a PE ratio of 5 means that you're getting 20% returns. So if Bitcoin's giving you a risk-free 20% return, that means a company on the S&P 500 or any company would have to give you a better rate of return for you to want to risk your capital in order to invest in that business. As of right now, what we're saying is a lot of companies are trading upwards of 34. That means that you're only getting, 3% return on most equities?
Which makes sense in terms of what current treasuries are yielding, right? I mean, I don't know what exactly the current yields are, but I mean, it's not crazy when you look at what those discount
1.5. I think that was headline news that the 10-year broke 1.5.
Yeah,
it's like the Nasdaq returned about 100 global pandemic 0.5.
It's kind of comical when you compare it to Bitcoin.
Yeah, no, it really is. I think we're losing Ben a little bit there. Hopefully he can jump back on. But
you guys hear me?
Yep, we can hear you. Your just video fell out.
I just wanted to throw in, when you're looking at what your return should be, like just kind of as a rule of thumb, you can just divide 1 by the PE ratio.
Yep.
And that should be what your expected return is. And then as well, to go to what you were saying, if equities are yielding whatever, we just threw out the 20% number. So if equities are yielding 20% and the risk-free yield is 20%, not only does it have to be greater than 20%, but I'm not going to invest in an equity just because it has 21% versus Bitcoin is 20%, which is risk-free, right? I need a way bigger return than 20% for me to be willing to take on any kind of risk versus doing this completely risk-free trade where I don't need to worry about any kind of don't need to worry about a business failing or any kind of counterparty risk or any of those kinds of things.
Yeah, I apologize. My internet just kicked out. We've got like a windstorm here right now. So that's a really good point about, you need sort of like an arbitrage of expected return well above that 20% the Bitcoin return, because you're like comparing apples and oranges, or really you're comparing like apples to like a Lamborghini, where you've got this apple we won't name stock price, but like, you're looking at this one company where you have to reliably, expect that the company can generate X amount of cash flow, that X country isn't going to institute any regulatory impact. There's just so many more variables to an individualized company. You've got people involved, whereas with Bitcoin, you've got a global asset that's totally decentralized by nature. And if you're getting a 20% risk-free return, why would you go anywhere else? It just economically and just opportunity cost-wise makes zero sense. It's exciting to see how this could play out.
Yeah, and
absolutely.
we're definitely seeing. Sorry to cut you off there. Well, I'll throw it back
No
to
problem.
you.
I was just saying, yeah, absolutely.
Yeah. I know Guy Swan. He's part of the Swan Bitcoin team. I know he had Bitcoin Camilla on 2 episodes ago. But basically, Guy Swan, he was talking about, even if you just look at Apple's revenue from 2014 to 2020, it's ran up. They're making their revenues in the billions upon billions of dollars. They're $2 trillion company at least. But I think it increased from like 254 billion to like 274 billion. I'm going to mess up the numbers, but basically it was like a 3% increase in revenue, but their stock price from 2017 to 2020 has increased, even with stock splits and everything, 202%. So obviously we're seeing the run up in assets. Look at just the stock market in general. It crashed in March of last year, and then it ran back up to record highs so quickly. And then we're also seeing it in the housing market. Maybe not for commercial real estate, but for definitely residential real estate, we've seen the run up of prices from different areas of 10, 15, 20% run-ups for the housing prices, which is just absurd. But I know you can correlate that to falling interest rates, and we're just pumping money into the economy with the Fed just buying up bonds like no tomorrow.
Yeah, I think that's the major point. Will, I want to pass it back to you after this, but I think that's the major point. Like there is going to be an inevitable repricing of assets, because really there's no other reason for stocks to be, and all real assets right now are overpriced compared to their cash flows. This repricing is sort of inevitable because these valuations are unsustainable. You would just need exponentiated growth of free cash flows to justify these valuations. And I think folks are really just starving for yield. Like we were just talking about, the 10-year at 1.5, that's headline news. And if you go into a savings account, 0.03% is not going to get you to retire early. So it's just interesting. I'm just wondering what that trigger point is for that repricing. But go ahead, Will.
I was just going to say, in regards to free cash flows, whenever we do get into this kind of, I say it because I think it's inevitable. I'm sure you guys do as well. But when we get into this post-hyper Bitcoinization kind of world, if you will, all these businesses, their valuations will be based off of free cash flows. Right now they're not really correlated to any kind of fundamental free cash flows like they have been, historically in the past. Like the golden age of Warren Buffett investing, for example. Mm-hmm. That's how I kind of got into Bitcoin. I was really interested in this kind of discount cash flow based valuation, because I think it just really makes sense. It's very logical, and it's pretty much just you're using a formula to predict the cash flows out into the future. You're basically drawing a line of the history of cash flows and then trying to predict where that line's going to move out forward into the future. But the problem is the currency is not sound. When you're doing that, you're assuming that you have some kind of hard sound money, and we don't have that. And then one other thing I wanted to touch on is, it's a little bit unrelated, but in terms of free cash flows, a company like Apple, their problem is not generating free cash flows, right? They could come out with little tweaks to the iPhone and sell as many as they want every year. And that's not their problem. Their biggest liability right now is the fact that they have a giant pile of cash, almost $200 billion of cash sitting there, and it's just basically eroding away in value. So for them, like some of these big companies, they're not looking at Bitcoin to get any kind of price appreciation. Like the three of us, we're waiting for Bitcoin to dip down so we can buy it cheaper, and buy the dip. But some of these companies are actually waiting for Bitcoin to get up to the point where the market is liquid enough, and the market cap is risen to the point that they're able to take on some exposure and move into it without substantially moving the price, right? If Apple put in even 1% of their assets, it's going to really move the price right now. It's just the Bitcoin is just not liquid enough right now to kind of absorb that kind of liquidity. Even if they did these micro buys like Saylor does, Saylor, when he takes his positions, he does these little small $2,000 buys every second so that he doesn't move the market. But even when he does, you can still kind of look back after he announced his buys, and you see, you know, the price had at least a little bit of a run up, and you can kind of see where he was probably buying in there. Like last week when we had that little run up to 57K, I think that was partially driven by his buying of 900 billion. I mean, 900 million. But yeah, for some of these companies, they're just sitting there waiting for this thing to get up to the point and mature to the point that they're able to get an allocation. They could care less about the price. They just want to protect the money that they already have, right?
Yeah.
That is a good point, Will, because I get, like you just said, I get really, really biased about my own personal Bitcoin strategy, which is, you know, I'm thinking of it right now as we're in the early stages of Bitcoin. I'm willing to sit on it forever because that is the value proposition of Bitcoin, is I won't ever have to sell it. That's the goal. But with these companies, like you said, like I honestly didn't really appreciate the importance of liquidity. Like Apple doesn't have cash because they're bored. They're waiting for the next best thing to deploy it, whether it's R&D, acquisition. It needs to be liquid. Like cash, whether it's Bitcoin or US dollar, is the most liquid asset and the most traded asset in the world is cash. So if Bitcoin is not a liquid market yet to the standards of an Apple, that makes sense. Then they shouldn't put their cash allocations into that unless they have, you know, the conviction to do so. But that's a really good point. The liquidity of the market is essential.
Yeah, I just wanted to add in as well. When you look at the velocity of U.S. dollars, I mean, it's just tanking. And so for listeners that don't know what that means, essentially the velocity of money just measures. I think you guys have touched on this before in one of the pods I listened to. Yeah. It just basically measures how fast money or how frequently money is changing hands, right? And when you look at the velocity of money over the last few years, especially since they printed, you know, mind-boggling amounts of money last year, it's just completely going down. And what that means is that money is not moving, and what that probably entails is that money is just being completely stuffed into assets. And Bitcoin, the velocity of Bitcoin is actually increasing. I'm sure you're familiar with Willy Woo. He's kind of a really well-known blockchain analyst. He put out a chart yesterday that Bitcoin it's actually surpassing the velocity of M1 of M1 money. Excuse me.
That's wild. That's hard to like fathom because that money's, you know, in the trillions of dollars, right? I mean, yeah, I forget what the M1 money supply is right now as we speak, but yeah, that's absurd.
You guys see that the Fed said they were discontinuing M2?
No, I did not.
No, I didn't see that.
They said they were discontinuing the chart, so I wonder why.
Oh my God.
It's probably not going to look too good.
They've got to, you know, all of a sudden it'll actually show inflation. They got to readjust the CPI numbers pretty quickly before they.
Well, they're looking for inflation, right? That's their goal, is to get to that 2.0% inflation and, you know, better unemployment numbers. But I don't know which is going to happen first. I think it's going to be inflation for sure.
Yeah, and I mean, even like Jerome Powell was saying, like, you know, oh, you know, we're not worried about inflation yet. We're just going to keep printing money. You know, we just want to keep the markets liquid. But even, I don't know if you guys saw, I think it was Friday or Thursday last week when the bond market had that crazy sell-off, and we were talking about getting to the 1.5% yield. It's because people were selling off their bonds, so then they just had to keep raising the interest rates of bonds in order. And the chart, like, it's going along, and then all of a sudden it goes like literally like a straight line up, and then it stops. And people are like, what happened? like obviously the Fed had to step in and say, like, you know, they probably block people from selling bonds, or they cap the bond market from selling off and having a liquidity crisis.
Bonds.
Or yeah, basically. But no, it's crazy.
You know, I suspect that at some point they're going to have to start doing yield curve control. That's what they had to do in the Great Depression area. Because, you know, essentially, like you were saying, just for listeners that maybe don't know this, because this is not something that I knew until, you know, the last few months. When you look at the bond market, the higher the yield means that the bonds are selling off. So the yields go up to incentivize more people to buy, right? And so the more people that are buying the bonds, the yields get driven down. And so when you see yields basically going parabolic, like you were saying, Chris, it means that the bonds are completely selling off. And so what the Fed does is they come in and step in and buy the bonds, because if they let the yield curve, run up parabolic like that, what that's going to entail for the markets, as we mentioned earlier, is that when you're using this risk-free yield to do any kind of discount cash flow valuation of any kind of asset, the higher the yields go, the lower, the valuations are inversely correlated to that.
Mm-hmm.
So the higher the yields go, the lower the asset price.
Yeah, I always say like a seesaw. Like as the interest rates go up, the prices have to go down to compensate for that.
Exactly. And so what's going to happen is, as you can, I suspect that the yields, this isn't the last time that they're going to spike like that, probably in the coming 12 months or, moving out to the future. So at some point they're going to have to step in and start buying these things, because they can't afford to let, the system is so fragile at this point, and they've been kicking the can down the road so long that every time anything happens, they have to go and step in way overboard compared to their recent actions. I suspect we probably will have some kind of liquidity crisis in the coming 12 months. And if that were to happen, I mean, the Fed's just going to come in and print way more money than they even did last year. If you're in cash right now, I mean, I know you guys are big proponents of Bitcoin, and I am as well. I don't own any stocks, but whenever I talk to people and they're like, what, I want to get started in investing, I tell them, the absolute number one thing right now is you cannot be in cash. If you are in cash, that is the most risky thing that you can be in right now.
Yeah,
it's just a guaranteed depreciating asset at this point. I mean, and the Fed is not hiding that. That's the strategy. I mean, Jerome Powell even came out and said, we are going to buy $120 billion of bonds every month until the situation improves. The situation has not improved. And I think, and I'd love to hear your thoughts, Will, and Chris chime in as well. The proposition of, and maybe I'm just like not fully appreciating things, but the value proposition of Bitcoin is always considered to be, sort of like a parallel to gold. It's gold, $9 trillion of gold. If we're talking a 20% yield, I mean, you can go to BlockFi and probably get like, what is it, like 6.5 or something if you're loaning Bitcoin. If you can get a 6.5% return in BlockFi by lending your Bitcoin, the bond market is like $120 trillion. I mean, is that the next market after we surpass the gold market? Why would you be in bonds if Bitcoin offers a yield that's guaranteed and risk-free? I feel like that valuation can just take Bitcoin to the moon. I don't want to speculate, but if you're looking for yield and you're a dividend or bond yield investor, you got to go to Bitcoin. You got to find a way to get to Bitcoin. I just love to hear your thoughts. Is that sort of what you're playing out with the over collateralization and the speculative attack in your article?
Yeah, absolutely. We were talking about asset valuations, but we hadn't mentioned until just as you just did. We hadn't mentioned the $120+ trillion fixed income market. And as you mentioned, they're completely yield deprived. And overseas in Europe, I was listening to a podcast with Plan B, and he was saying how essentially, they're buying negative yielding bonds, and that's a very risky thing to start getting into, because essentially what you're doing is you're betting that yields are going to keep going down, and then once yields start to revert, right? Once yields start to reverse, then the whole thing unwinds, and that can get very ugly. So yeah, absolutely, I completely see Bitcoin eventually. It's like almost like, you think you have this giant dam and Bitcoin is just completely demolished the front of the dam, and then the water's about to start coming flowing in. And I mean, any smart investor in the fixed income market is looking at this risk-free trade. I was listening to this podcast with BlockFi CEO Zach Prince.
Yeah,
he's saying they have a lot of institutions now that are kind of coming in and saying, okay, we'll throw a little bit in, just to kind of see how it works. And they'll probably play out over the next couple months. And then after they get that, this happens with everybody who does anything in Bitcoin. You kind of dip your toes in the water, and then you're like, oh, okay, I need to do some more. And they're going to, instead of 10 million, they're going to come back with 100 trillion. I think this thing's really going to start running more towards probably Q3, Q4. As you see more people looking to take on that risk-free trade, and then as well, just to flat out, the big names that are probably going to step in terms of corporate adoption on their treasuries. I think this earnings season will be interesting. I think Oracle reports in the next week or two, so I'm eyeing that. But
Yeah,
I'm sure.
Larry Ellison's on Tesla's board. I know we've mentioned in the episodes before. So, definitely he was part of the decision for Tesla to put 1.5 billion on their balance sheet of Bitcoin.
Yeah, and I wouldn't be surprised at all. At this point, it's like it's cool because we're so involved in this, but at the same time, it's like when you see these companies putting this on their treasury, it just makes sense. Like it's just a logical thing to do at this point. It's all new, and so it's very exciting. But at the same time, I mean, when you step back and look at it, it's just the logical thing to do. You're not going to put your money into gold. Gold is completely underperformed Bitcoin. And
also manipulated. Like JP Morgan just got hit with $927 million fine for manipulating the futures markets with, basically they're paper trading gold and they're manipulating the price that way. Bitcoin, it's very hard to do when it's an open source code that everyone can see.
And you have to own the real asset.
Yep.
Yeah, and as well, when you're putting something on your treasury, I'm not gonna say, okay, I'm gonna put 80% of this thing that's a 10x improvement on gold, and I'm going to put 20% in the thing that's not. I'm going to go 100% in on the thing that's a 10x improvement of. And this is something that Michael Saylor said before. The reason he didn't buy any gold is because Bitcoin is a 10x. Like gold is the very first market that Bitcoin is going to absolutely devour.
Yeah,
it's probably going to be the first market, and then you'll maybe see fixed income or these other things, but Bitcoin is first and foremost an improvement on gold as a store of value. So that in my mind, that's probably why you've seen gold selling off so drastically over the past few months. Could be due to some other factors as well, but if you look at Bitcoin price compared to gold, I mean it's almost like inversely correlated at this point.
Yeah, and I'll just chime in. I know I was listening to Michael Saylor and Saifedean on the Bitcoin Standard podcast. He had like a little mini series of Michael Saylor was on for a few episodes, but the one that I heard that was really interesting, I think he was saying Bitcoin is a $1 billion improvement to gold. And his logic's if you wanted to buy $1 billion worth of gold and you wanted to ship it from one spot to another spot, let's just say from one bank to your bank account, you have to then hire about $5 million worth of, guards, 747 planes, logistics planners, diplomats you have to pay off. It's about $5 million to move $1 billion worth of gold, and it takes about 1,000 hours to do. Bitcoin, you can move $1 billion worth of Bitcoin for the price of $5. So you went from 5 million to $5, so a million time improvement. And then it would go from 1,000 hour exercise to a 1 hour max is how long it would take for your transaction to confirm. So it's literally 1,000 time improvement in time, and it's a million time improvement in cost. So that's how he got to his $1 billion in time improvement of gold. He's like, obviously it's going to take time for that to play out and for that to be true, but that's why he sees it as, that's why he, exactly like you said, Will, he's buying gold, Bitcoin and not gold for that very reason.
Yeah, absolutely. In Saifedean's book, in the first chapter of the Bitcoin Standard, he says, Bitcoin is the most efficient way to transfer value across space and time, which is, it sounds like some kind of Robert Breedlove type quote, but it's very true. Right now, part of the reason that the Federal Reserve, or at least, even historically, they have held gold is because if you hold gold, I mean, you could be a target. If you have, giant blocks of gold in your house, someone could just run up in your house with some guns and take your gold. So with Bitcoin, you don't need any kind of, you do need security, but not in the same sense that you do to like protect gold. Like no one's going to go to the U.S. government and wherever they keep their gold, Fort Knox, and try to bust in and steal your gold. Versus, they probably would if you were holding it in your house or something like that.
Yeah, it's just the scale of logistics. Like when you think about Bitcoin, which to me, like when I first started hearing about Bitcoin in probably like 2016, 2017, but I was dirt poor, so I didn't buy anything. It just made so much sense. Like thinking about like video games, which have just like these intergalactic currencies, like credits. Like why would you not have sort of this like unified means to transact value? Like to be able to open your phone, and like Strike is sort of a case study of this, where it can be absolutely agnostic to the volatility in the price of Bitcoin. You're taking US dollars and transacting over to euros in the fraction of a second. And that's Bitcoin, the network. It's not Bitcoin, the asset. But at the same time, like if you're talking about settlement of debt or whatever, you're talking the scale of billions of dollars to be able to transact in an hour or even faster, which is going to be much faster as developers continue to build upon the network. comparing that to taking tanker ships and 737s to settle some debt that's just going to be locked up in a bunker, what a waste. We already use digital payments. We use Venmo, which is inefficient. You see the pending thing on your bank account for 3 to 5 days. We use credit cards. It's just inevitable. It just makes sense.
Yeah, and one other thing you touched on as well is that the Bitcoin monetary network is just flat out more efficient. And something that a lot of people say is that, oh, Bitcoin can't scale, because they're thinking that you're going to go to Starbucks and buy a coffee with Bitcoin, but that's not necessarily the point of Bitcoin. The point of Bitcoin is to have this core final settlement layer, similar to, like, for example, in the current U.S. payment system, you have networks, for example, like Visa. And what they do is, they have really high TPS, which is transactions per second. So they can do millions and millions of transactions. And what they do is they batch them all together, almost like, for example, if you go to the bar, right, and you're going to have some drinks and you're going to go get hammered, you're not gonna pay as you get each drink, right? You're gonna say, I'm gonna open a tab and I'll pay when I leave. It's the same idea. So they're batching all these transactions together, and then they take them to final settlement, like Fedwire is the most well-known one. And so they'll take those transactions to Fedwire, and then they settle them finally there. So it's the same idea with Bitcoin. We'll probably have, for example, like the Lightning Network or some kind of second, third layer protocols that are built on top of the core Bitcoin protocol. And they'll gather these transactions, these micro transactions, batch them together, and then bring them to the core Bitcoin final settlement layer to settle those transactions. So I think that's one big thing. I thought Citi actually was talking in their report today that came out. They were actually talking about the Lightning Network. So I think that's one kind of version of FUD, if you will, that's kind of been around Bitcoin for a while, that it can't scale. But I think that's one big misconception, that people don't realize. The purpose of Bitcoin is to be this pure, incorruptible final settlement layer that other payment rail. It's essentially the rails that the rest of the payment network can be built on.
Yeah, I completely agree. And even just kind of, elaborating once again on Bitcoin in general. I guess what people don't realize, it's not just a US problem. It's not just a China problem. Yeah, we've been the ones that have benefited from the current, global economy and the way that it's set up, with being two of the largest economies, not just with people, but just in terms of resources. But, at what cost? Venezuela, look at them, their currency's inflating away faster than they can do it. You can even look back in history at World War II, when, the German mark was getting destroyed, because after they lost the war, everyone wanted them to be paid back in their native currencies. So then the Germans decided to print money to buy the currencies to pay them back in the debt. And basically we looked at their money supply, saw this was happening, and then we were just charging them higher and higher interest rates, or, wanted more money back because it was not equivalent. But I mean, it's only a matter of time before, like we said, the global bond market collapses. And that's because, like, negative yielding bonds in Europe, ours are, I guess, slightly positive, going to go to zero.
Negative in real terms.
In real terms, negative. Yeah. I guess the number looks like it's real, but, with the amount of money we're printing, it's negative for your buying power. So yeah, it's just a matter of time before the house of cards collapses, and we're just going to have to reprice into something. I know a lot of the Peter Schiffs of the world, or the Nouriel Roubinis, want to be repriced in gold like we were in the 70s, but that's not going to happen. That's like saying, the internet's going to collapse and we're all going to go back to typewriters. Like, if the internet collapses, we have a lot bigger problems, but it's not going to be a typewriter is their solution. I can tell you for sure that is not the answer. So yeah, I guess that's my 2 cents. Will, if you want to comment on anything, and then Ben will start the wrap up.
Yeah, I just wanted to throw in, you brought up the Weimar hyperinflation. I think that's like probably the most famous case study of hyperinflation that everybody kind of knows. During that time, when you look back at, there's a couple of books and there's plenty of articles you can look back and not looking at it in retrospect, but the articles that were written from that time and from people in that time, like newspapers, et cetera.
Yeah.
And merchants during that time, they were actually flocking to not only gold, but they were also flocking to U.S. dollars. So the merchants that switched from the German mark and they moved into U.S. dollars and started accounting and using U.S. dollars as a medium of exchange to pay for their business. They were actually all right. It was the people that stayed in the German mark that got crushed. The thing that's different now is that every single country around the world is kind of, if you will, competitively devaluing their currency to try to keep their exports attractive. So you have this dynamic where it's almost like a race to the bottom where everybody is printing. It's not just the US. It's every country around the world is all every central bank, they're all printing money and they're all competing against each other to devalue their currency faster than the other. So you have no safe haven currency to run to. And so to me, I just don't see any other alternative other than Bitcoin at this point.
Yeah, I mean, globally, these global economies are just printing their way into Bitcoin being globally accepted. I mean, they are literally painting the stage for this to happen. Will, so grateful to have you on the show. This was an awesome conversation, and I think if you're interested, we'd love to have you back because we could talk about Bitcoin forever.
Oh yeah, man.
And the only thing that's scarce is Bitcoin and time. So, Will, you mentioned that you're really all in on Bitcoin. But something I always ask our guests is, what has been the biggest investment mistake that you've faced? And if you don't have one that comes to mind, maybe a piece of investment advice that you'd give to someone. So I'll let you pick one of the two.
Yeah, sure. So, haven't even been 18 for a year now, so I haven't been able to even really dabble in a lot of investments. But I will say, if we're talking about Bitcoin, I'd probably say I bought, when I first started getting into the whole, if you will, dare I say, cryptocurrency space, I bought, if you would, one of these scam coins and kind of fell into that kind of,
I like the censorship.
all the noise. I kind of fell into the noise of that. I made a little bit of money, but it ended up like where it went way up. I thought I was a genius, and then it just completely, got dumped on like all the other scam coins and how they go. And after that, I was like, all right, I gotta really figure out what's going on here. And then I did my due diligence, and then found Bitcoin. And I think that's kind of a familiar path a lot of Bitcoin maximalists go on. I think a lot of them kind of dabble around in the scam coins before they end up getting to Bitcoin. But that'd be my biggest thing, is that if you're going to come into this space, there's a lot of noise. There's a lot of distractions. It's easy to get caught up in, this coin has this better feature than Bitcoin. It has higher TPS. It has I don't know, whatever, maybe it's faster. It's
more efficient, less cost,
XRP has,
it is.
Yeah, they have all these partnerships they like to market and stuff. If you're marketing it, it's kind of a red flag in my opinion. Bitcoin has no marketing. The users of the network are the marketing. If you look at any kind of 10x technological improvement, they all speak for themselves. It's something Jeff Booth really is emphasized in his book, The Book of Tomorrow. It's like when you look at Google really doesn't have to do any marketing, because everybody who uses Google is telling their friends, dude, you got to get on, you got to try this search engine. It's awesome. You just type in anything and it just pops up, right? And it's the same thing with Bitcoin. Like the community is the network, and the community is the marketing as well. So that's kind of a red flag. When you see as well, on Twitter, some of the scam coins, it's very obvious they're paying people to shill the coins and make these posts about the coins, and they pay celebrities. I don't want to throw any names out, but I've talked to some of these, if you will, like influencers, I guess you could say, in the Bitcoin community, and they told me, we've been offered money to shill these coins, and we're not going to do it because of, we're just not going to mislead people like that. And I feel like people in Bitcoin have a really high moral standard, and they understand, this is more about making money. I think a lot of us get drawn into Bitcoin because of the, if you will, number go up technology, but it's a very big, it's almost like an ideological movement behind Bitcoin. It's a lot deeper than just getting rich, if you will. The monetary, or if you will, spending power appreciation that we're getting by buying Bitcoin is a result of us kind of sacrificing, for the volatility of the currency that's emerging, and we're getting rewarded helping bring the currency into fruition by this monetary appreciation. That's the way I look at it. We're being rewarded for adopting earlier on, as the people that adopted in 2011 were, rewarded way more than we were. They have like 1,000,000% returns or something like that. But
they had a lot of different struggles with Mount Gox going down and different things like that. So,
I can't imagine back then, man. You think you break up a really good point. I think Bitcoin now is de-risked to the point where I think the asymmetry of it is just at an all-time high. You're looking at maybe, especially after this recent correction we've had, and it looks like we pretty much bottomed out. You have the downside potential of maybe 30%. If there's some kind of black swan event, maybe we see another 50% correction, which at this point is still well above 20,000. But you have the potential for 100,000, 1,000,000%. Probably bigger, but I don't want to throw out crazy numbers. Potential, yeah. So the asymmetry of betting on Bitcoin is just incredible. If you're betting on something like Tesla, the downside is dramatic and the upside is limited. So it's asymmetric in the reverse way. So I think
now that they have Bitcoin on their balance sheet though, and they're an early adopter, so what's that say? They're
might as well just buy Bitcoin though. I mean, yeah, that's a great point, Will. I mean, people I see on Twitter, and I know you're short on time, but I see people on Twitter, oh, I missed the good old days. Bitcoin was at 57. It's like, well, it was sub 10 in this past July. It's like, how short of a memory can you have? I mean, that the 3x, 4x return, be patient.
Right.
It's okay. Let it come down again. It can breathe. I won't mind. That's a great point though, Will.
Yeah, I think a lot of people are like, oh, it was so obvious to buy Bitcoin back at, $50, $100. No, it was not. If you had it as well, unless you really, the thing is, you would have to really understand what you were holding in order to not sell. But the thing is as well, there wasn't as much content back then to really confirm your buys. Now you can I listen to Bitcoin podcasts all day. For good or for worse, it is almost kind of like an echo chamber. And I should probably be listening to more contrary Bitcoin opinions, even though I've never heard any really valid ones. But my point is just that there's a lot of content out there that can really concrete your belief and conviction in Bitcoin now, and that just wasn't around back then. And it could have easily, in the early days, it could have easily got shut down, or the hash rate could have been taken over by a certain party, and then they could have done some kind of 51% attack or something like that, like way early on. But at this point, that's never going to happen. It's de-risked to the point where, like we were just saying, the asymmetry in it is just beautiful. I don't know any other asset that has that kind of risk profile.
It's been around for over 12 years. It's not new. It's not that new. Go ahead, Chris.
Yeah, Will, thank you so much for coming on, dude. I know you are younger than us, but you are wiser beyond your years compared to Ben and I, even though we are Bitcoin maxis. Your articles
the amateurs, though.
Yeah, we're the amateurs. We look to you, and you're younger than us, or even I know I follow Young Investor too. He's like a 12-year-old from the UK. This kid does statistical analysis and stock analysis way better than me. So I'm like, all right, I got the youngins taking care of me, and I got some of the older generation to look after as well. So, Ben and I are in a good place for our resources. I guess my thing I always love to ask is, what's your favorite book, podcast, YouTube channel, website, wherever you like to go for investing information? I know it'd probably be Bitcoin based, but where will that be?
Yeah, sure. So, first of all, thanks a lot for those kind words. That really means a lot, man. It's amazing when you're learning something that you're really interested in, it doesn't feel like learning. You know what I mean?
I completely agree.
When I'm sitting down for doing my schoolwork, I mean, it's brutal, especially given that a lot of the stuff I'm learning in finance probably won't apply to post-hyper Bitcoin. I feel like I'm learning.
At least not the denominator.
Yeah. But as far as learning resources, I would say for books, I would have to go, if we're just doing one, I would have to say one for finance and one for kind of life in general.
Okay.
For life in general, I would say Principles by Ray Dalio.
Okay.
That book is really life-changing. Ray Dalio is probably one of the wisest people that I know.
One of our favorites.
Yeah, man, he's brilliant. And as far as finance, I would say probably another Ray Dalio book, Navigating Big Debt Crisis. I think he's wrong about the yuan being the new the new reserve currency in the future, obviously. But other than that, I mean, he breaks everything down better than anybody that I've ever heard. I mean, Ray Dalio is just brilliant, and he talks about all these different. He breaks down, the whole debt cycle, inflationary and deflationary, and then he does all these case studies in the book about the 2008 financial crisis, the Weimar Republic, hyperinflation. So if you're looking into kind of understanding how the economy functions, I think that's an excellent book. In terms of podcasts, I would say definitely Preston Pitch and Stig Broderson's We Study Billionaires. Yeah, I don't think to be honest, I don't think any podcast really comes close to that in terms of finance.
We're striving
overall.
to get there. I don't know.
They're the reason why Chris and I exist. Honestly,
yeah.
They really brought me to new heights with what I know. So I attribute everything I know to them.
Yeah, I had this overnight stocking job my freshman year. I graduated high school a year early, so I really didn't save up that much as much as I should have. And in college, you're spending more money than you think you would, especially on the weekends. If you get what I'm putting at there. So towards the end of the semester, I was a little low on funds, and so going into Christmas break, I was like, all right, I got to go back and get a job. So I needed to get a job. I had like 2 weeks, and the only job I could get on the fly was, obviously a job nobody wanted, which was an overnight stocking job at Michael's, the arts and crafts store. And so when I would work there originally, I was listening to music, and I was like, this is terrible. Like, I'm just pumping nonsense into my head for 8 hours the whole shift. I was like, I want to make some money. I'm gonna try to learn about finance a little bit. And so then I started listening to We Study Billionaires, and then it was from there. It just compounded on itself, and I was just completely started listening to I think I've listened to every single episode. For anybody listening, you guys are doing a great job, but I would also listen to We Study Billionaires as well. I mean, the two of those, that's the way to go. That's the way to get your financial education.
Shout out. I guess I have one more quick question. I know we're really short on time here, but one more quick question.
No worries,
I guess with Bitcoin, I know you're in the college right now. Are your professors very contrarian to it? Do they support you? Are they against it? Are they don't care? I'd love to hear your input on that.
Yeah, man. So the way my classes are now, they're all online. I'm at home. I'm not like on campus. So we really don't have that much interaction with our professors, to be honest. The way it's kind of set up is just that I just have something due by this day, and I just have to complete it. Occasionally, I'll send the professor an email if I have a question, but I don't really have that much interaction.
Okay.
But last year, I in my economics class, I did give my professor a little bit of a hard time.
The great thing about free and open markets is that someone's right and someone's wrong. So we'll see who's laughing all the way to the bank.
Yeah, man. I think it's interesting because a lot of these academics and economists, it's really not their fault. We give them a really hard time, but it really isn't their fault. I mean, they are closed-minded, in my opinion, but they've been conditioned to think this way. And when you have, for anybody that hasn't, done any kind of economics or financial courses in college, you don't understand the history of how we got to the point that we are. You're just learning formulas about the way that it is, and nobody's telling you why things have gotten to this point, and the whole, everything that we just talked about, how about everything is unsustainable and all these kinds of things. And so the way that you're taught to think is just that this is the way it is. And you're not really taught to question anything more, so just memorize certain formulas and the way that things are. So I think to an extent there's that aspect of it, and then also these people have dedicated their whole lives to kind of a fiat standard based system, and for them to just say that this internet protocol is going to come along and just wipe out their whole career of work for them, and then even like Peter Schiff, for example, it's the same kind of principle. I think for them, it's just kind of hard for them to just admit that everything is kind of just thrown out the window. But that's part of life. You need to be able to adapt, and as Michael Saylor would say, all your models are destroyed, and and you need to accept the change, and those who don't will be forced to buy in later on. But you do see some of these people. You have a lot of big names like Bill Miller, Paul Tudor Jones, Stanley Druckenmiller, excuse me. And and they're all understanding the change that's going on, and they'll be the ones that benefit much more than these people that wait and they're kind of laggards in the adoption curve, if you will.
Yeah, I mean, Bitcoin is an online course for you to sort of find your own truth and question the norms. It's everyone's chance to do some research. Like you said, information is extremely accessible. You don't have to take our word for it. Do your research, and like I always say, like find your own truth and convince yourself. Know what you're owning, and but don't miss out. The wave is coming. So, Will, thank you so much for taking the time to meet with us. I'm so glad we were able to connect. So hopefully we'll get you on the show once again. But yeah, thanks for coming on.
Hey guys, thanks a lot for having me on. This is super fun, and I'll be excited to come on again. This is a great conversation. I love talking to other people who are interested in Bitcoin, because not only does it help get some of the word out there, but also kind of helps shape your thinking, and bounce off other people that are interested in the space as well. So this was awesome, guys. Thanks a lot. I appreciate it.
Yeah. Anywhere, I know we normally ask anywhere to find you. I know your Twitter handle is like William Clement. Is that right?
Yeah. So I think Twitter's probably the main place that I would say to go. If you're interested in any of my articles or anything like that, or if you want to DM me or talk about something or whatever, my Twitter handle is W Clemente, so CLEMENTE, and then III.
Okay.
Awesome.
We'll make sure to put that in the show notes. Thanks so much. We recommend all our listeners, look at your articles. I know I read them and they're really well written, but I have to look up half the things in there as well as references to figure it out. But they're really well written. I love the graphs. I love the references to various figures like Preston or Pierre or a lot of the other people in the Bitcoin space. But thanks so much for coming on, Will.
Yeah, thank you, Will.
Thanks a lot, man. And all the articles, it may seem like I'm in the know or something, but I'm just copying smarter people than myself and just kind of translating it into a way that I can understand. So, there's always somebody smarter than us. It's just our job to find those people and then kind of absorb the information from them.
That's all research really is, isn't it?
Yeah, exactly. Exactly.
Right.
Awesome.
Thanks a lot, guys. This was awesome.
Yeah,
Glad
thank you,
to have
Will.
you
Thank
on.
you everyone for listening.
Have a good one, guys.